All right, hey, welcome back. And we're going to talk about qualified longevity annuity contracts in this one. But what exactly is a qualified longevity annuity contract? Okay, and actually I pulled a couple different articles. And for those of you that have traditional retirement monies, and this may be of interest to you, but a qualified longevity annuity contracts, QLACs, were approved on July 1st, 2014 by the U.S. Department of Labor and Treasury for use in approved retirement plans and traditional IRAs. Now, it's a game-changing product for consumers because of its low commission, but agents don't actively learn about it and sell it for that same reason, okay? So how does a QLAC work? QLACs allow you to defer distribution of a certain sum past age 70 and a half inside a traditional IRA. This guarantees an income stream that can be started as far as age 85. You don't have to defer for that long, but you can. More important, the money in a QLAC is not considered as part of your required minimum distribution RMD calculation when you turn 70 and a half. Now that's a big deal because it means your taxes will be lower on your RMDs. A QLAC is the only type of annuity that can do this. The maximum you can invest in a QLAC as of mid-2019 is $130,000. For example, if you have a total non-Roth IRA asset of $520,000 on December 31st, 2018, you can buy a $130,000 QLAC in 2019, according to rules in place in mid-2019. This represents 25% of the previous year-end balance. All right. Now, QLACs can be structured for a joint payout with your spouse along with a cost of living adjustment increase. You can also set up the contract so that 100% of any unused principal money goes to your listed beneficiaries, not the annuity company. And let's go, I'm going to pull up another article right here. This is from the New Retirement as well. Let's talk about some of the pros, and then I also talk about some of the cons. Pros here, tax deferred status. Okay, the QLAC lets you purchase the annuity with qualified funds, i.e. your traditional IRA, retaining your tax advantages. No required minimum distributions till later. Again, like we said, most traditional tax-deferred retirement plans have required RMDs, which require a person to begin receiving their payments by age 70 and a half. Longevity annuities, which is the QLAC, purchased with qualified funds, allow you to defer any mandatory withdrawals until age 85. Then also improved retirement readiness. Yeah, I'm going to skip down here to the third paragraph. The EBRI looked at two scenarios where QLAC can boost retirement readiness, converting 15% of a 401k balance with a current employer to a QLAC premium over 10 years and converting the accumulated value of employer 401k contributions to a QLAC at retirement age with employees either opting in or opting out. In both scenarios, purchasing a QLAC resulted in a small boost in retirement readiness, and younger generations are more likely to benefit more than early baby boomers. Okay? Peace of mind. You're going to eliminate your risk, eliminate the uncertainty of the financial markets. If you're invested in stocks, you're unsure of what money might be available to you at any specific time. The QLAC eliminates the guesswork from planning for retirement income. And also you can cover for a long-term care need. This is huge. Long-term care is absolutely huge. Some people use the QLAC to specifically cover a future long-term care need. Long-term care is one of the biggest wild cards, and it really, truly is. Then also spousal protection. QLACs can be purchased to cover both you and your spouse. This means that if you die before they do, they will continue to receive the income. Now, what are the downsides of a QLAC? Lack of control. The flip side of being able to guarantee income is that you lose control over the money in the short term. It might never get used. Some people fear that they won't live long enough to get their QLAC income. It's important to select a reasonable start date for payments. And that's something we can talk about and walk you through there. Okay? Lack of inflation protection. The QLAC does not offer inflation protection. So you still want to be careful to think through how much income you will need in the future to be purchased a QLAC that will cover your inflation-adjusted needs. Now, for example, if you already have qualified tax dollars or dollars in a tax-deferred retirement plan like a 401k or an IRA, it may be worth your time to consider purchasing a QLAC and converting some of these savings into income so you start receiving later during retirement. Use an annuity calculator to estimate your income or see how annuity fits into your overall retirement plan. Need to trust your insurer. And again, I'm only representing quality insurers. I have a number of different insurers. I mean, whether you want to do a single premium annuity, a deferred income annuity, if you want to do a multi-year guaranteed annuity, if you want to do a QLAC, and then we also get into fixed income. I sell no variable products. That's not my specialty. I don't get into that. Okay? But need to trust your insurer, reputable companies, highly rated, A-rated by AM Best, Moody's, so forth. And in the previous article, we talked about there's limits on how much you can invest in a QLAC. You can see right there, we went over that in a prior one. So with that being said, you can find more information. You can call me on the phone if you want. Or you can go to my website, standardinsurancesolutions.com. Or you can visit me downtown Bucyrus. But a QLAC is something you definitely should consider for those of you. It's relatively new, started in 2014. And for more information, just get in touch with me.